All right. Good morning, everybody. How's everybody doing on this fantastic Thursday morning? The markets have opened. We've got 9 minutes of trading under our belt. Bitcoin pulled back a little bit yesterday, the day before. We were looking for a pullback on Tuesday as we took out last week's high. We have been pulling back, but it has been bouncing from daily support. Yesterday, you closed back above daily support again. So this level might potentially hold. We'll have to see how today closes. But it's not pulled back as far as I would have expected. We did, however, take out this low, which was potentially my short side target, but it was only for the near term trade that I took on that day. When I basically posted it on Twitter, and it worked out. Unfortunately, it came back up and stopped me out of the position. So that usually happens. I should have got in higher, but I was busy doing other things, so that's on me. But anyways, it did work out. The trade has worked out. Now we're just going to see if it wants to continue to go down or if the midpoint of the weekly candle holds. This is what we've got going on right here. The midpoint would put you around, I don't know, 50,300-ish. But this weekly pullback here so far, as I said in Tuesday's stream, this could potentially be the high of the week. And today is Thursday, and we are trading off of that price. So kudos to me, I guess. Nah, I just didn't want you guys to be buying up here at these expensive levels, even though we do got the halving coming up, even though we did get the good news about the ETFs, all that stuff. It's still, risky to buy highs. It always is. So you got to be very careful. I think a pullback would be fantastic. We're getting it. Next week, you could see it run even higher. We'll have to see how this week closes. We got a lot of time left before that happens. So we'll just keep an eye on it. As far as setups on the day, there wasn't any. The setups came early this morning. And it would have been a difficult one to make as you did close 2 hours above your intraday resistance, which would have been this spot right here. So you did close this candle above it and then this candle above it. So it would have been a tricky trade, but if you just would have waited for a fresh high and then took it, you could have got in short. But that candle occurred at 4 o'clock in the morning, and that's way before I get out of the bed. So yeah, there wasn't really a setup there. This is going to be that daily support right here. And then down here is that wick low. And you can see that we did ultimately take it out right there with that candle. Just barely took it out, but nonetheless, it did get taken out. And now we're just kind of chop city, right under $52,000. Now, it's important to understand that this high was made at $53,000. And now, if this becomes the high of the daily range, you're going to see a high at close to 52K. It's $52,008. $52,008 would be that daily high there. So it is starting to look like it does want to move a little bit lower, but we'll see. I think that Bitcoin has been and is leading the markets to the downside. So even though we printed fresh highs, this is going to be based on earnings from NVIDIA yesterday. NVIDIA had earnings, and the earnings were good. You can see here, they beat on both top and bottom lines and guided good. So the market definitely took that good. And pre-market, you set in a fresh all-time high at around let's get the exact price. The high was 775.88. And then now you can see that the market is trading up a little bit from the open. So here is the opening candle right there and a nice bullish push. Why is this important? We could see more upside here, even though Bitcoin is trading down, because this weekly candle before the earnings were out was an island top reversal signal or an island top reversal pattern. Basically, this weekly was up here, and then you gapped down and traded lower. So that would have brought on a lot of short selling. Basically them assuming that the market was going to continue with downside pressure, and you would be looking at that signal and try and get short. So this thing could run all day long, all right, based on a short squeeze. I don't know why people would want to short it. I mean, it's Nvidia. It's been the top running stock of the year. Last year too. I mean, they've been crushing earnings ever since AI has been a craze. So yeah, stay out of its way is the best thing I could say about it. But this stock ultimately is getting other stocks. They're catching a bit of that bid also based on that. You can see AMD trading down here at daily support. Daily support. If you were going to be a buyer on this is the price you would have wanted to be a buyer at. 162, as that was daily support. It has been daily support for a long time, and we did trade to it. We tagged it on Tuesday, and then yesterday we just had a very small inside day essentially, and then today you're gapping up. Nice 10, 12, $15 move there. And like I said, it's based on Nvidia, in my opinion. It's just pulling the rest of the market up. We go over here, we'll pull up the market watch tool, and you're going to see that, yeah. So it's pretty much a split market. Generally, when I look at this tool, all I'm looking for is how many stocks are advancing, how many stocks are declining. That is what I'm after. That's what I want to know. If it's very heavily skewed on one way or the other, then that's typically the way I will look for day trades that day. But you can see that it's exactly half, pretty much exactly half. This is the S&P 100, but it's got 101 assets in it, and you're trading pretty much right in the middle there. If I wanted to go bullish, I would want to see at least 80 stocks advancing with 20 stocks declining, and vice versa. If I was looking for bearish trades or looking for a bearish day, I would want to see at least 80 stocks declining versus 20 stocks advancing. And if you get into the higher numbers like 90-10, then yeah, those are good days to look for short-sided trades. But we're pretty much mixed. Like I said, Nvidia is your big winner today, up hugely based on earnings. So everything else that's up pretty big doesn't look like it because this thing is up huge, almost 17%. So we'll keep that in mind when looking for entries today. Now, the two trades that I told you that we were watching this week were McDonald's and Ford. We were looking for Ford to trade down to roughly $12.01, which is this price right here. Looking for it to find support there and then start to trade out of this area to the upside. If the S&P 500 remains bullish today and tomorrow, then we could see Ford get a nice move to the upside. And unfortunately, the short side on McDonald's not working out. As you can see here, we've closed 3 candles above this trend line, 3 bullish candles, I might add. Yesterday's candle was an inside candle. So if you did take that entry and you're still sitting in the trade, I don't know where that would put your risk level at. But for me, it's kind of still, for some reason, in profits. So I must have got in pretty much at the highs on Tuesday. The Ford trade is in the red, and then the can trade is just getting absolutely demolished. The can trade was a trade that we took based on unusual options activity. We had a lot of call buying taking place at the $3 area, and I told myself if we close below that support, then I would close the trade out. We did close below it. However, I was unable to get filled on an exit order last night. So I am, now that it's bouncing, I am going to allow it, hopefully, to bounce higher. If we can get well above and close well above yesterday's high, then I'll keep the position open. All right, I'll keep it open, because you know a lot of times you get these fake out moves, these moves that are really hard, and they'll go down and they'll take out your specific level, and then force you to exit the position, and then ultimately just to watch it trade right back up to the level. So yeah, I don't know. Obviously, I can't know if they were buying calls or what, if they were selling calls. I just can't fathom that someone would sell calls on a $3 stock. It just doesn't make any sense. In the most of your ETFs and stuff like that, they have to get rid of anything under $5 because anything under $5 is considered a penny stock. So literally, someone bought like 8,000 or traded 8,000 $3 calls at the $3 strike. So when I see that activity, it tells me, hey, that whoever's doing this, whatever trader's doing this, it could be for a hedge. You got to keep that in mind. But obviously, it maybe they know something, right? The most fearsome thing about the trade is they did it only 2 weeks away, 2 weeks out. So yeah. So now time decay is going to start really, really hurting that position. And it's not quite at my cutoff point, but it's close. So it needs to really get moving, and it really needs to get moving quickly. It's got earnings coming up next week, and that's going to bring in a whole new factor. Like, do I want to hold this thing through earnings? Because if it gaps down hugely, then I'm going to eat a full loss. I think the full loss is like $12 above my risk tolerance. My risk tolerance on the small account being $60. I think I'm in it for 72. I'm trying to see. Yeah, it's not showing me. Well, I got 71.63 deltas. So I'm assuming that's probably going to be what I can lose total is 71. So $11 above my 1% loss. So I don't know if I'll hold it for earnings or not. We'll see. But yeah, I don't know if I would take this trade. Like I said, after I took the entry before doing research, and it was a bad trade to take. So the small account is still in the red. But like I said, I got some things that are working and some things that are not. And that's why it's in the red. Once we get things working, we'll get up out of there. No problems. I did put on a couple other things here that I'm watching for potential breakouts, but none of these have weekly options. So I don't like trading things that don't have weekly options, but they're all at 2-year highs, and they're trading around the highs. So potential breakout coming. Earnings on this one, so I'm gonna get rid of that one. I wouldn't even mess with it. I do not like to trade before earnings. So 2057 is the price that I'm watching for a close above, and then a retest of that level would potentially give me an opportunity to get long on this. It's cheap enough to do it by shares. So you want to keep this one on watch. It's FTI. TPR is another one, once again, but this one has already made such a huge run. I'm going to get rid of it. And then CELH, which is Celsius. This thing is ready to go. I should have bought it yesterday. It's got wide spreads. I did post it in the stock room yesterday. And this is what it looked like. Right here is what it looked like yesterday. And I was basically showing you that it has the potential to be a cup and handle or rounding bottom formation. Either way, all it's got to do is get above this high right here, and you'll be at all-time highs on this thing. And you could potentially rip up to $80. That's a $20 run. almost a $20 run. We did not tag the level, but we got very close yesterday at the end of the day. So that's when I should have put the trade on, and I didn't because it has wide spreads. This is what it looked like via the options. So we were looking at the $62 strike in the money, and then we were looking to sell the 67 out of the money, and then we would have gotten that for $2, which is 50 cents more than I like to pay for something, but it still had a $298 profit potential. So a little bit better than 1-to-1, right? A little bit better than 1-to-1, like a 1.5-to-1 risk to reward. As far as risk to reward, right? You'd be risking a full $2 on the trade. However, that trade would be done almost this morning if it would have been taken yesterday. You'd be up nearly 30-40% on the options if you would have taken the trade yesterday. So I'm going to keep an eye on it still. Maybe I get another pullback once it trades up into resistance. It's got resistance right up here. And then trade, give me a pullback a little bit. Maybe I'll jump into it, but we'll see. And like I said, that's pretty much it. I mean, there's not much else. TLT, kind of looking for it to break down. Did get the breakdown yesterday that I was looking for, as I did buy puts on this retest here. Old support. This was a trap, so I always revert to the last support candle before the trap. You can see right there that this candle held, so that is the right support level. But on this gap up, a retest of 93.79 was the entry, and looking for it to continue lower or to break down and go lower. But it did break down yesterday. Today, you're gapping back up above the new support zone. So we'll see. Do we take out yesterday's high? If we do, I'll probably close that position out. Just simply because it's been down here for 5 days now, and it hasn't been able to break down. Bears are just not pushing it lower. If the dollar could gain some strength, what was that? If the dollar could gain some strength, oh, it was my mouse. Give me a second. All right. If the dollar could gain some strength, it would go a long way in helping this short. But the dollar is, it's having difficulty. So let's go look at the dollar. Dollars had a nice move lower this morning. And then we had CPI come out for Euro. You can see that they were right on the money with expectations on the year-over-year core. And then month-over-month CPI came in higher than or lower than last month. Last month they were at 0.2. They came in line with expectations there, and you got expectations hit on year-over-year headline CPI. So they're actually doing better than America on that, on the headline CPI. Not bad. All right. That's their target. 2% is their target. They're almost there. They're 0.8% off. So that, who knows? But for some reason, the euro took that as bearish. Had a nice spike up, and then it sold right back off. I was short this yesterday. Obviously, this run up right here stopped me out. So I'm no longer in that position. But we'll see what's going on with this. It traded right up to this resistance right here and reversed. Well, it wouldn't be that. It'd be that. Right up to it and reversed. So probably should have waited to today. I just forgot or didn't know actually that they had CPI coming on today. Otherwise, I would have exited the position for a small win yesterday because I shorted it at the monthly open, which is this white line right here, or a little above actually. But anyways, yeah, that's that. Stopped out of that one and can't re-enter it because that wick is just too big. Maybe it gets a bearish move and it then gives us a retest of that monthly supply or monthly open. Then we could potentially look for short side entries on it again. Got the same thing going on here with the pound taking out this supply touch and then moving back to the downside. So it's just choppy right now. I mean, things aren't going as planned. We thought maybe the S&P 500 was done, but since Nvidia beat earnings, you can see it is clearly not done yet. The SPX even is up 77 freaking points today, guys. Remember, the weekly expected move was only $66. This thing is up $78 from yesterday's close. That is massive. That's a big move. Big move. You're looking at $12 more than the weekly expected range was. So essentially, you traded down to the bottom of the weekly expected move yesterday and gapped up this morning and is trading higher. All-time highs. All-time highs. So this could take another few days to weeks, depending on how many people were actually short. We had a pretty big discussion on the weekly expected move last Tuesday, so I'm not going to go back into it, but I did specifically say that we look at these things because the market stays inside of them 68% of the time. So you don't necessarily want to look for new shorts down here, right? Because there's a possibility that buyers step in here. This is a pullback to the lower edge of the weekly expected range. Buyers will step up there, and then put sellers will step up there. You got all kinds of bullish positions that'll go on right in that area. That's why they're important to keep an eye on. But you can see we're trading almost back up to the top edge of the expected move. So if we don't get bullish, like if we don't get a huge bullish push, then I might sell some calls. I don't know yet. I gotta see if this squeeze is gonna last for any amount of time. Then I probably will wait on selling calls because that's just a huge move. It's a very volatile move. All right, let me get over here. All right. Good morning. Good morning from my 9 to 5. What's up, Chris? Sorry to hear that. Good morning. Good morning. These opening tracks are actually fire. Thank you so much. Yeah, I like that one a lot. The first part of that song isn't very good, but that from halfway point to the end is great. But it's only a minute. Good afternoon from a wet UK. Yuck. Rain. Disgusting. We had some rain last night. PMI came in manufacturing higher, services lower. Yeah. It's also pretty much helping me to lose money today because that McDonald's short position just isn't playing out. And it's not a trade that I would usually take because the structure is very bullish. I took it based on a signal given by a buddy of mine. He's into cyclical analysis and basically saying, but he's also trading a bit different than I am. He's actually looking for a full-on test at 298 before he gets short. I went ahead and got short with the calls or the put spread. So we'll see. But it is down right now, and it's down pretty big. It's not down a full 1% yet. So what I'm hoping is going to occur is we just took out that high there. I want to see it fall back and turn itself red on the day. That would be fantastic if that were to happen. But if it closes bullish, then I might close it and then wait and see what happens if it does get back up here for a retest. You do have also another daily resistance potential coming in at around 297.10. 297.05 is the exact price for a potential next resistance area. But clearly you've broken the downtrend, right? Clearly it's been broken by 3 days. So we'll see. Bull traps can last a couple days. Bull traps can last a full on week. We've seen it a million times. So, but do I want to sit in this thing hoping that that's what it is when the complete and total market structure is bullish? Based on my analysis, my type of analysis would not have me shorting this market. We're above the 50 and we're above all the major moving averages, and all of the major moving averages except for the 200 simple is right where it should be, right? For bullish continuation. So this is not really a good setup. Not really a good setup at all. But we'll see if it plays out or not. He's pretty good on his analysis. But he's definitely looking for this to be a high or somewhere in this area. And then he's looking for it to roll over. But yeah, I shouldn't have taken it. It is what it is. I like to stick with the trend because the trend is what is in, right? Like now look at that Delta. This is a trade that we were looking for longs, but right in through here, it's hard to see because of all the freaking chop and the gaps. If we put this on a line chart, this thing, we should have never closed this out. Should have never closed this trade out. This was the area that I was looking to close it out. But unfortunately on this day here, or whenever I took it, when it pushed to the downside, it triggered my 1% stop. And I just never got back in. But I should have. It just wasn't showing me enough bullish strength to retake it. But I should have, because the structure was bullish. Looking at the line chart, you can clearly see it. I can clearly see it with the candles. It's just easier to see with the lines sometimes. But yeah, very, very stupid move there on my part. Now it is coming into resistance, obviously. It's like a full-on test of resistance. That weekly res right there is what was keeping me out of the trade, as it was struggling so hard to get above and stay above that weekly resistance level. But now we're well above it, testing the ultimate daily support. And you got another resistance. You got another weekly resistance up there as well. Yeah, last week's candle looks good. You took out the high, closed bearish, but it's still a trending candle because you didn't take out the low. So as long as it's a trending candle, that's the way you look for price to move towards the trend. It's showing you that it had the ability to make a fresh high. And like I said, it never did take out the low. So as long as the lows are intact, you still have a trending candle to the upside, even though the candle closed bearish. For any new person here, we have a 3 candlestick formations. That's all there is. That's the way we believe. You only have inside, outside, and trending candles. Just simplify your analysis that way. I know there are 1,000 different candlestick patterns out there, head and shoulders and all that crap. But I mean, if you just stick with trending inside, outside, you'll be fine. But that trade ended up working out. It just not for any money. And that's what counts. If some of you are still in it, you could probably take profits now. eBay is another one we were watching. It's struggling at resistance. There's a lot of resistance coming in here. Weekly res, close above, pretty good. New resistance, 43.82. All right, 43.82 is going to be the new resistance level to watch. Weekly closure above that, and then we could look for higher prices on it. I don't love it because it's at the lows. Like, if I'm going to do a breakout trade, I will only do it if it's making at least fresh 2-year highs. Those are the breakout trades that I can take part in. So yeah, The small account is struggling, and the main reason why it's struggling is because I'm making a lot of stupid moves. It happens. It happens. It won't take but like 2 or 3 trades to put this thing right back up into profitability, and then we will absolutely blast right on by the S&P 500, no problems. All right. FXI, Chinese stock. It's doing good. This is one that we were looking for a bounce. It is bounced. They are flooding the marketplace with stimulus right now, trying to prop up the markets. And you can see here, once again, it's difficult, but you can definitely see higher lows, higher highs, and boom, out you go. But this is still structured bearish. On the near term, it's structured bullish, but on the long term, it's definitely still structured bearish. You can say this thing is bearish all the way up to $26, technically, because that's where the 200 is. So we've seen a lot of false breakouts. The TLT is a perfect example of that. Let's go back to the candles, and I'll show you. Excuse me, coffee. Ugh. Anyways, here is a perfect example of a breakout above the 200, and then boop, right back down. So your bearish structure remained intact here, even though you were trading above it. What you would need to see in order for me to become bullish on this again would be, it starting to drift towards the $100 mark, therefore flipping these moving averages around. It just didn't. So I am still bearish on this, and I will remain bearish on it. It's the only profitable trade that I have on right now, and it's not profitable by a lot. AI, this is one that we were watching just because it has a heavy short interest. This thing was doing good, and it did look like we were going to get a breakout. Unfortunately, they came right back at weekly res there and stuffed it right back down. It's got earnings coming up. I thought for sure that this thing would get a huge jump based on Nvidia's earnings. It did not. So that's something to keep in mind as well if you are looking to actually try to get long AI. Simply, it does look good. This does look like an accumulation formation. That structure still does not look good. I mean, it's really at one of those areas like it could change, right? It's sideways. The moving average structure is not telling us anything much, but the 100 is above the 200, which is good. We just need the 50 to get above the 100, and at that point, the 21 will obviously already be up there. But you would need to see bullish continuation for that to happen. So with the structure the way it is right now, it looks a little bit more bearish than bullish. And you can see right here, you're back under the 50 for now. If we get back above the 50, then I might look for pullbacks into the 50 on the RSI to get long. And unfortunately, it's got earnings coming up. And that sucks. I hate taking trades before earnings because even if it's good earnings, it could still get sold off, and that's a huge problem. But it does have a big short interest. So for anybody out there that likes short interest stocks, this one has the most short interest out of any other stock at 62%. This is Riley. It has the highest short interest in the stock market right now. But AI has, like, the last time I looked, it was like 38%. Yeah, it's still 38%. That's a pretty big short interest. Pretty big short interest. So what I'm basically saying is if it was able to break out, you could see this thing rip based on the short interest. Shorts have to close their positions. The rest of these, no bueno. Procter & Gamble, we were looking for this to potentially be the top of a range and it to fall back into the range. It has a bullish market structure, and it's remained that bullish market structure. You had a pullback into support. One candle broke below support, closed below, but then the very next day, you popped right back up out of it, and off you went. Now you're back above the main resistance here. So could one potentially look for longs on Procter and Gamble at 158.11? Yeah, you could potentially, right? Just manage your risk 1%. You definitely want to do that via a spread, though. You don't want to just buy a call. You definitely want to put on a spread, and you want to do that 35 to 42 days out. The options they're not very expensive, but they can move quickly. The in the money 157 spot 50 strike is almost $4. So it can move quick, is what I mean. Just moving 2 strikes out of the money would put you at 125. So you would lose almost $300 just by moving 2 strikes. The strikes are $2.50 wide, though. So if the market were to move right here to this price, you would literally have lost $300 if you just go the call route. I'm sorry, you would have made $300. If it goes down to 154.50, then you would lose. Yeah, if it goes up, you're going to make money. I had that backwards. Spend too much time looking at option tables. All right. XHB, another one that we were looking for bullishness. Ultimately, I ended up taking a short on a long time ago, but I closed that position out because this is clearly accumulation. Now, it did get the breakout, and it is struggling to continue that breakout. But this is the all-time high candle here. Or did you take it out? The high on that is 180. The high of today, 175. So you're 5 cents lower than the all-time high. But you are at all-time highs on this. And the breakout, we were looking for a potential move up to about 103. So unfortunately, this trade is pretty much already played out. You can see here we broke out, then had this fake out move right there, dropping back under resistance, but closing above. And then on the next retest here was a perfect opportunity to get long. So missed that one. That one would have been on Tuesday. What else? What other one were we looking at? Already looked at eBay. Nike for potential short. It's just, I'm not liking it. We did take the short here, and we did take profits here. But then it moved up all the way back up to the yearly open. But as long as it stays under the yearly open, I remain bearish on it. And the moving average structure is still more bearish than bullish. And even though you did get some bullish momentum here, the momentum oscillator does not really show it as being that bullish. So it may be struggling here. It may be falling. We'll see. 105.90 is the resistance level that we're watching right there. And then, of course, the yearly opening range for short side entries on Nike. Target would be the 2020 yearly open. I don't know why that says 20. It's probably 23. No, it is the 2020 yearly open. So yeah, that's acting as a bit of support. So if you could get the entry in at 105, you could take profits at 101. That'd be a $4, almost $5 move. That's not bad. Square, obviously, it's still stuck in this range. As long as Bitcoin is not breaking out, making fresh yearly highs, I would not expect Square to do either. Square's chart looks absolutely disgusting. That's the only thing I can say about it. This run right here was all the bull market. Like when you had the pandemic, then the Fed stepped up, propped the market up. Literally every stock in the world pretty much made fresh all-time highs and ripped. But then once the bear market started, you can see just how some of these things were absolutely killed. And then Zoom was the other one we were looking at. We had a bearish bias on this, and that bias has played out. This was our actual target. So you can see we almost hit that target to perfection on yesterday's open. You had a little push down, did not quite hit the target, but I would have taken profits right there. That trade is done. That trade is done. And it gave you an entry right there. So you could have gotten that short Friday. That's not really good, but we've been watching this since all the way back in January. But still, it looks kind of bad, right? I mean, you're getting ready to make fresh lows. This is the low, the all-time low right there. So the fact that you're right back to almost the all-time low, it's not a really good sign. Yeah, there's your dinosaur. So that's all of price action. All-time lows. Not good, guys. Not good. If you want to buy it because you think it's going to go higher, be my guest, but it is definitely not something that I would be interested in buying. And then IWM is struggling after it got bullish. We were bullish on it. We still do have a bullish bias on it, but can it maintain that bullish bias? That's the thing. New resistance to watch for potential long entries. You're below the yearly opening range. However, if 197.94 holds, then you could potentially look for longs on the IWM via call spread or just outright calls. I wouldn't buy way out of the money, but I would definitely buy 35 to 43 days out. And the in the money one strike, the 198 strike is sitting at 619, so that's $600. That's why I'd play it via a spread. But the implied vol does not work for a call spread because of the skew. The skew is still high. As long as the skew is still high, long call spreads don't work. Some of them don't work. You might be able to find one or two that does, but let me go do a $5 wide here real quick. And it's not bad, but it's not great. There we go. That's $5 wide. Yeah, it's not good. It's not good. It's about half and half. But, still kind of have to like it up as long as the S&P 500 and everything else is moving back to the upside. But the S&P 500 pulling back just a little bit. The SPX is not. The SPX is still up there at $76. That is so crazy. That's a huge gap. PMI came in manufacturing higher, services lower. Existing home sales was a beat. We are rich again. Yep. Ave USD, please. All right, so long term, this thing looks like garbage, but I mean, it moved its structure to the bullish side of things, but can it maintain? Can it maintain? That's the question that needs to be answered here by price. Right now, it is holding support. This is the level that I would watch as support, 89.59. There's another support right under it, just a couple bucks under it. So you could watch that one as well for bullish entries. Just make sure you're not using, make sure you're not entering it with, 100x long and all of your money, and you're using a liquidation price as your stop loss. That is not the right way to trade, guys. That is not the right way to trade. You will lose all of your money. But it doesn't look to be a huge mover either. So, yeah, I think you could be okay as long as you maintain that lower support down there at 87.33. Because by then you'll be right back under the 50 on the RSI, but you are essentially retesting the 50 kind of sort of right now. So as long as it can hold that and hold these two price points, I think you could potentially see a bounce. But also we need Bitcoin to probably bounce too. That does kind of help some cryptos get moving. Let's go look at what Bitcoin dominance is doing. Yeah, I mean, Bitcoin dominance is kind of going down, back down again. So, I mean, it's very choppy right now. The dominance is, but since you're at the upper edge of kind of the range bound, this is not a tradable asset, obviously, but it just marks all the other cryptos versus Bitcoin strength. And when this is going down, that's usually when alts will outperform. So just watch those two levels of support on Aave. What else did I want to look at? Not that. USD CAD right here. We got a trend line and a potential hold. So if we can get dollar strength again, this could move back higher. But obviously this wick right here throws everything out of whack. So as long as that's there, we can't do anything really in FX land. Yesterday and the day before was the trade entry for the shorts, and we were just wrong. We weren't really wrong. We just got this stupid freaking wick, right? Should have expected it with yesterday's close being higher than the previous days. Should have expected it. Should have expected it. I mean, a beautiful save on that 50 as well. It's just, I just can't take the short where it is. That wick just totally screws everything up. But if you were lucky enough to get in the short at 108, 874, hold it. Because I think you're going to see, it's probably going to go lower. Right? It's probably going to go lower. The reason I'm looking for dollar strength is because of inflation. And since the Fed isn't going to cut 6 times, that's also good for the dollar. Cutting interest rates is not good for the dollar, generally speaking. Now, if they're cutting interest rates because of a, potential market collapse, that's good for the dollar. But in these conditions that we currently have, we have positive GDP, inflation is going down. It's just a little bit sticky right now. Not really the best outlook for the dollar, but it kind of looks bullish. Kind of looks bullish. I mean, it retested that supply zone, 2023 yearly opening range, pretty good, and then up, big bounce there. So we'll watch. We'll watch for a retest of today's open, this swing low right here. Maybe we get a retest of that tomorrow. And the way to trade that would be looking for Euro USD to potentially retest that monthly opening right there. Anything else? Has anybody got something they want me to look at? It doesn't matter. FX, stocks, options, whatever you want to look at. Index products, indices, whatever. Walmart had nice earnings. The split's getting ready to happen. It's just a 3-to-1 split. It's not going to affect price at all. Well, it's going to affect price, but it's not really going to affect you if you are in a position. But this thing made fresh all-time highs and came back down. I don't think we had retail sales number. You got crude oil inventories happening in 20 minutes. Where is crude at right now? Looking like it's trying to break out. Looks like it's trying to break out. I think if we close the daily above 78.47, we could potentially buy some calls on this. It could be a false breakout, though. That's one reason why I hate breakout trading. So what I probably should say is if we retest support at 77.13, we could look for long entries. But you kind of already did that today. Did that just a couple hours ago almost. You did it on the 9 o'clock candle. Looks like it's trying to break out to me. Coin, please. Yeah. Even though coin had blowout earnings, it's going to be heavily affected by Bitcoin. Bitcoin does not look like it's going to be a bearish rollover by any means. It just looks like a pullback, right? And so does this. It looks like it has pulled back and it's now, which it didn't pull back deep enough. But I mean, it doesn't matter what it looks like. Are people buyers at $170 or not? And the answer was yes. Well, they are today. Yearly opening on this is kind of in a crappy spot, but at the same time, considering where this thing, the heights that it did reach at one time, I mean, if Bitcoin does remain bullish, this is going to remain bullish as well. The structure is bullish. People are going to say you got bearish div there, but you don't, because this is not a higher close. It's a higher open, but it is a lower close. You need a higher close. You didn't get it. You haven't got it. It is not divergence. So, I mean, I would just watch support. The support level that I told you to watch was this one. The last time that we looked at it, 165.67. You had 1 day close yesterday. Yesterday it closed under it. Now you just took out that candle's low. So there is a potential bear trap in play. So look for retests of 165.67 to get long. It doesn't mean it's going to work, but I do like it when we stay kind of in the 60, because from 60 to 70, that's when things can really get heavy momentum, right? This thing had blowout earnings, but it did not have a blowout kind of move, which is crazy. Its price is too hitched to Bitcoin's wagon at this point, I think. So we have to see, does Bitcoin hold support, or does it break down and look for a deeper correction? That's going to be the ultimate question on Bitcoin and on Coinbase. but technically your support is still intact. Does Aussie yen look good for another long here? Took profits on the first position at the 22 high. Let's go look at Aussie yen. I wouldn't get long here. No. You're potentially failing at resistance. You've had several days of straight bullishness. So I mean, it's possible that it holds support here. It is possible, but so watch hourly closes. I mean, it doesn't look great, but it's not terrible either. As you can see, it was struggling here, struggled again, and then there's your breakout and there's your rip. This is a deep correction, but it absolutely could be just a correction. If you start closing hourly candles under 98.54, then you got to wait on the daily close. If the daily close can close above it, then yeah, I think you could potentially still look for intraday trades to the upside on Aussie yen. I am bullish on it. I have a bullish bias because retail has a bearish bias. But we're getting very, very close to those levels on the yen that you could have the BOJ intervene. And if the BOJ does intervene, that's going to really, really, really hurt your Aussie yen short. I mean, long. Yeah, I mean, it's back at these levels. So if they intervene, which it's possible because they are in a recession, and that's going to hurt any long yen plays. So I would keep my eyes open and watch every announcement from the BOJ from here on out. As long as you're just risking 1%, it really doesn't matter though, to be honest. I mean, yeah, if this holds and you get long here, right? Say it holds, you get long, and you're only risking 1%, literally. I wouldn't do it right now because of the momentum, but at the same time, it could turn from here. But if it's going to turn from here, I would want to see it base out, right? A struggle to close below it. Just be risking that 1%. Always, always, always. You're right in the monthly supply. But that only matters on a monthly closing basis. There's 7 days left on this monthly close. Yeah, it looks good. It's definitely accumulation, right? Had a couple fake out moves here and there, and then boom, right up it went. Need Aussie strength in order to keep this thing going. And yen weakness. You got the yen weakness. Do you got Aussie strength? Not really. Actually, you got Aussie weakness. Yeah, this is what's hurting that trade right now. That's what's hurting it. Bitcoin looks like it's trying to bounce. right back up into that daily support. So let's see, does support hold as resistance, or do we get a close back above it? That's going to be important. But it still looks good. I mean, it doesn't look terrible. You're making, lower highs, but we'll see. Just watch that price. That's the price to watch moving forward. For potential resistance, or if it gets back above it, look for a retest of it for support. Pound dollar. Also, do you think pound dollar goes lower? Yeah, if dollar strength happens, yes. I expect pound dollar to go lower, but it's going to be based on the dollar, right? This thing has been going sideways for a long time. And even though we did get the break below support here, you got another support just under it. So it's just struggling, but it's sideways, and it makes it a difficult trade. But yeah, I do believe if we get dollar strength, I would be looking for shorts on the pound dollar. I mean, this trend line right here has been holding so good throughout the pound's history. We were talking about it when it was up in here. We were looking for that quarterly to break out, close above, and it never did. We made nice trades on this. Traded right back into it. Q1, though, does not look bearish. It's just trading sideways AF. It's just going to be determined on dollar weakness or dollar strength moving forward. But yeah, I like it lower. The pound has been trending lower. It's for its entire existence. It's just timing it or finding areas of which to get short has been difficult because it's been choppy and sideways. We're traders, we're always wanting things to break out and just keep going straight up, or break down and go straight down. That's not how price ever works. Usually this is what price does, right? It's usually sideways. Every now and then you'll get on those really good trends, but doesn't happen often. Especially with currencies. Especially with currencies. Tesla had a nice move, breakout above the neckline, and you're right back under the neckline. So this does look like a false breakout on Tesla. Like I said, I probably wouldn't be looking for Tesla longs until it gets down around this lower edge of this channel. It's not a perfect channel, but I mean, this was close enough, I guess. Near-term support on Tesla is going to be, let's get rid of this neckline since it's of no use any longer. 188.13. You don't want to see a daily closure below that because you do have a near-term uptrend going on right here. So if this trend is going to prevail, which it's got a lot of heavy bearishness as far as moving average structure is concerned. There's a 3-touch trend line right there. 1 touch, 2 touch, 3 touch. So maybe it gets, if it wants to continue to go up, it finds support right in this area here. But like I said, man, this thing, that is a perfect rejection off the 50 on the RSI. And that's exactly where I would have been looking for shorts. The moving average structure on this is, it looks to me like this thing could really start having a decent downtrend. But we'll watch this for near-term longs, even though it's not structured bullish at all. The trade would have been to look for shorts. Yesterday would have been a perfect day for it. But Nvidia beat earnings, and that's another reason why I'm kind of more bearish on Tesla than I am bullish, because it's just showing inherent weakness in the tech sector, right? It is showing that inherent weakness where everything else is up at highs. Tesla is not. Tesla is actually down like 20% on the year. Everything else is up significantly on the year. 23%. And whenever that's happening, you have to ask yourself why. Apple is also down on the year. Amazon up on the year. Meta's up on the year. Google still up on the year. Microsoft up on the year. Nvidia definitely up on the year. Tesla down on the year. And Tesla rounds out the Magnificent Seven. And that, you have to ask yourself, if everything else is so bullish, why isn't Tesla? There is a reason for it. Netflix, which used to be part of the FANG group, is even doing good. AMD's doing good. Intel not doing so good. But I think Intel will eventually start doing better. But it's coming right to a support area right now. So this is the level to watch. A daily close under, then we'll watch 41.20. But pretty big down day on really good news for Nvidia. Intel is another chip maker, so why are they struggling? That's you got to ask those questions. Why is it struggling when other chip manufacturers aren't? 43, yeah, I got you. It's just, it's showing inherent weakness. It's under its yearly opening range significantly. So it's bearish on the year. I don't like it. It doesn't mean it can't pull together, but it definitely needs to hold here. I thought for sure this thing was going to break out and move higher. It just isn't. But it is at a level you could potentially buy a call and like spray and pray. And the calls aren't too expensive, right at the money. So if you bought the $42 strike, you'll be in the money one spot. It's down pretty good today, too. 4%. Why is it down 4%? Yeah. I don't know. It's a risky play. I mean, the Bears are killing it. They did not allow it to get above 44.68. But this could be like a shakeout move as well. It doesn't have to go all the way down to these lows either. It could absolutely hold here. I think a 4% down move on the day is good enough to basically shake people out. It's showing it's only down 1.56% because it's going off of yesterday's close. How much is it down prior to yesterday's close? Whereas it's not showing how much it's down as per today's open, which would make more sense, but that's not how they do it. It's down 4% on the day. So it could bounce from here, but you're taking a huge risk because it's not only down, it's like down good, right? It's down good. Heavy selling the first 10 minutes of the market open. Boom, boom. And then on that 15-minute mark, hit support. I do not like to buy things that show heavy momentum like that to the downside. Those are really big 5-minute candles. That is heavy selling. Heavy selling. They must have guided lower because they had a really good beat as well. And they got crushed. So even though, all the other chip manufacturers are doing good, Intel isn't. Maybe it's because they guided lower. I don't know. But it's at support. I can say that. Can we set up a spread? No. We cannot set up a spread on it either. It's at $1.86. So it costs $1.86 to put on a $5 spread. So you're risking 186 to potentially make 314. But it has to go all the way up to $47. It's kind of a slow mover. So I guess it'd be easy to manage risk. If we close the daily under this price, then you get out of it tomorrow on the open. But then you risk a severe gap down as well. If you want to do it. Just manage your risk. Bullish. Yeah, I don't know what you're saying. Technically, you're technically bullish is your name. You're just saying hi. Hello. Good morning, Johan. AMD up 9.5%. Yeah, AMD is having a very good day based on NVIDIA's earnings. And that's another thing, right? Like, why is AMD doing so good and Intel not? NVIDIA, AMD, and Intel are like the three big chip makers. And Intel's doing exactly the opposite of AMD and NVIDIA. They aren't helping it. Could you look at VAC, please? Enter at retest 9155 or don't even touch it after this move. All right. When you say that, it already scares me. This is a wild chart. So Marriott Vacations Worldwide Corporation, is that like the same company as the Marriott hotel chain? Or do they have a different ticker for the hotel chain? Hotels probably not doing good. I don't know. Wynn is doing fantastic, but it's like the only one. You do have a breakout here, but you got plenty of resistance right there. I mean, the moving average structure is going to be completely and totally bearish. There you have it. Like this thing could bounce all the way up to 102, 10, 104, and then fall right back down again. So, I mean, there is a potential for gain up to around that price. They have a dividend coming up, and dividends can affect stock prices. I probably wouldn't touch it, but as long as you, like, if you do get a retest of 91.48, as long as it holds on a daily closing basis, you could potentially get long and target the moving average. I mean, that would be a $9 move. I don't know if you're wanting to play that via shares or options. More likely shares because it doesn't have weeklies, and the spreads on those monthlies are $2 wide. So options are definitely out of the question. Definitely out of the question for options. You would just have to buy the stock. But I do not like the chart. No, I would be more suited to short, but I wouldn't short this because it's got a lot of momentum right now. I would wait for it to get up around here and build in a resistance and then look for shorts. But like I said, there is potential for that movement to get up there. But I definitely do not like the chart. No, not at all. It looks rough. Yeah, it's breaking out today, but that's just, yeah, based on earnings. They had a pretty good beat. It could be a rounding bottom formation, but like I said, that move up to the 200 is going to be your measured move. So it could be playable up to there at least, and that's about it on that one. McDonald's is looking better. I like that. Ford not looking so good. I don't like that. What was this? FTI. I don't even know what they do. I don't think they have FTI. Let's see. Do they have weeklies? No, they do not. And they have earnings. Oh, they just had earnings. So that's why they're breaking out today. They got a dividend coming up too, but that's pretty far away. Spreads aren't too bad on it, but it only has monthlies. I usually don't like to trade something that only has monthlies because typically there's not a lot of volume and open interest on these things. You know what I mean? And it looks like a slow mover. So, yeah, maybe. What does it look like 57 days out? Still just a 10 cent. It has a good spread. It definitely looks like an accumulation formation. What a beautiful test of support that was. Absolutely flawless. Boom. Would have been a little deep under the 50, but still. Yeah, I like this one. I mean, it looks like it's getting ready to break out. And since it had good earnings to help get it above resistance there, could be something. It's also weekly res, so that's an important level for it to get above, and it got above it. Got another weekly res coming in at 21.30, and then ultimately the high week close up there at 22.20. What is it? 22.25. Yeah, this looks good. I like this one. Definitely looks like a rounding bottom formation, which is typically consistent with accumulation. 2057 is the price to watch for a retest. We don't want to see it close back inside the range. If it can maintain this push, look for a retest of 2057. And the options on it is cheap and good spreads. Or decent spreads, I should say. They just opened up 15 cents wide. But I went out 57 days. You got a 22-day strike and a 57-day strike. They're only 10 cent wide on the 22-day 22-day expiration, not strike. 57-day expiration and the 22-day expiration. So spreads get wider the further out you go, but I like to go further out as it gives the thing time to play out. But obviously, the more expensive the option is, well, the more likely you are to hit your 1% risk. But this one's definitely going to stay on the watch list for me. And sell H as well. I mean, but this one, we may have missed it. You may have missed this bad boy. This is all-time high on this, I think. Yeah. Ooh, right in the monthly res. Yuck. Yeah, that was definitely the play, man. Shh, we missed it. Should have bought it yesterday as it set in the weekly low. Should have got it yesterday. My problem was the spreads on the options. Bitcoin's still struggling at daily support. All right. If there's no other questions, I guess we can wrap it up because we pretty much discussed everything that I'm watching, everything that I'm in. But obviously I will do more scans. Let me run a scan real quick on unusual option activity and then we'll bounce. A lot of shit going down today. Holy moly. Look at all this unusual options activity. Now, a lot of these things are going to be end of the week expiration. So tomorrow, Feb 23, Feb 23, Feb 23, all of them. March 1. But I don't look for like this stuff because AMD is such a big. But I mean, there's a lot of people buying puts. A lot of puts being bought. No, they're buying way out of the money. Puts 172.50. There's no way you get down there. Holy cow, look at the freaking options volume for puts. Can we build a put spread though? I mean, it's only one day out, so The implied volatility works. Wait, no, it don't. Shit. You could do a spread here, buy this one, sell this one. It's a $2.50 wide spread. Your cost would be 91 cents. That's what you would be losing if you're wrong. 90 cents. But you can make a 155. So not quite a 2-to-1 risk to reward. Let's go back to AMD. 151, what is it? 177.50. So it just needs to get to right there. And you'd be like 50% up. But do you want to risk 90 cents? Well, now it's 88 cents. 85 cents. If it keeps pushing and this thing gets like around 60, then I'll take it. Because all it has to do is get to right where my cursor is by tomorrow close, and you will make money on this trade. And that is a freaking possibility. However, if you close above this candle today, then you're probably going to gap higher tomorrow. It's all-time highs. That wick right there is all-time highs. But that's crazy. Crazy, man. A lot of freaking stuff going down. What I like to look for is like this right here. But I like the further out, right? March 8th, that's not that far out. 6,000 puts for MU. Let's go see if they were buying or selling. I can't. Because 15,000, well, I technically I could say that they're buying the puts. Because there's over 6,000 of them traded. So this number is higher than that and that. So this is probably where, was it March 8th? Yeah, March 8th. Only 2 weeks out. Let's go find them. They're right there. $85 puts. Yeah, $85 put. So it does look like they're buying them. Let's go look at MU's chart. Oh my God. You're only at 85.56 right now. Breaking out. Resistance is at 87.45. You're testing last week's open right now. And potential supply. This looks very interesting to me. Let's see if we could put on a spread to close that risk. And we'll go out a week further. Give us 22 days instead of 12. Or what was it, 15 days out? We can go 22 days out and see. He buying the 85 strike. We could do this. No. No, can't do it. You would just have to do what he's doing, which is buy the 85 strike put. Right here. So you'd be risking $2.14, 15 days out. But it just needs to drop a little bit to be in the money. Just needs to drop a little bit. Right there. So if it could just get back under today's open, you'd be in the money. Since this one's so far out, I'd keep it on watch. I would keep it on watch. MU. If you close above 85.53 today, then leave it alone. But if you don't, then you could potentially take that $85 strike and risk $200 on it. You don't have to risk the full $200. You could always exit if, like, you have a small account, right? If you have a small account, then you definitely don't want to risk the full $200. You would risk just whatever your account equity is on it. This is a slow mover, so it is easier to mitigate risk on it. The problem is it's getting some of that strength from Nvidia, right? That's a big gap up. So literally everybody's calling the bluff on Nvidia, or at least that person is. And he's choosing Micron to do it because Micron's not at all-time highs and it's a slower mover. So it's easier to mitigate the risk than it is on, say, Nvidia. But Nvidia is making fresh all-time highs as we speak. It's up 15%. What the hell? People are getting ran over. Ran over. 780.85 is the high. I mean, this thing is probably going to go much. I could see it going higher for the next several days based on a short squeeze. Because it did, like I said yesterday, it had that perfect weekly signal for bearishness. But it don't look like that no more. But you were all the way down there. Where did you close? So we closed right here. Look at that. So yesterday at the close, you was like, you had just a tiny little wick on this candle to the upside and then this big red candle. So it looked like an island top reversal. It even gapped down. There's the open. So it even gapped down. So many people got short yesterday based on that. And all it took was earnings to screw them. Yeah. But like if I wanted to play this, if I wanted to call BS on this move here, then I would do it on MU. We'll put it on watch. MU, Micron. We'll put it on watch. We'll keep watching it today, but as long as Nvidia stays strong, this is going to be a no-go. Last week's open. And we'll mark last week's high as well, because if you take that out, you're going to have a bullish engulfing weekly candle and on something that's in an uptrend. slightly up, slight uptrend. Well, not really. It's actually a good uptrend. A bullish engulfing, but not at, yeah, even, no, not really. Yeah, there's your resistance right there. So there, I mean, that's old resistance right there. Come down to it, set in a bullish engulfing at support, old resistance, new support. That would be a very bullish signal, not a bearish signal. So we'll keep it on watch, but it cannot, must not take out that high. And I would actually like to see it close under this line here. And if it does, then maybe tomorrow, or if it's under this white line, like say 10 minutes before the market closes, you could always buy the put then. And then you just, even a gap up isn't going to hurt you really bad. But you definitely only want to take it if it's under that white line, not above it. If it's above it, you're breaking out. You're no good. All right, we'll go ahead and wrap it up. You guys have a fantastic rest of your day, rest of your week. For those of you who will not be hearing from me, we'll see you again Sunday, and happy trading, everybody. Make sure you guys trade safe and trade smart, as always. Only risk 1%. Think risk first, then reward. Have a great day.